Hello, welcome to part 2 of our explanation of cash flow statements. So usually cash flow from operation is it's difficult for some students, especially with non-finance background. So I usually start with a simple example, and I'll do it right here. So let's start with an example. Let's suppose you sold $10 of goods. It costed you $5 to procure those goods. You had a profit of $5. Now the question is, this is your sales or revenue, this is your cost of sales, and this is your gross profit. So if somebody asks you, all of these transactions were done in cash, and after these transactions, how much cash do you have? So the answer would be $5. How? Since I sold the goods for $10, so I got plus 10 in my bank. I spent $5 on buying this, so in this is a negative cash flow, and I'm left with $5 as a balance. So second part, so let's do a more complicated example. Same thing. So we have a profit of $5, but if I tell you that out of this $10 of sales, I only received $5, and this was paid for in cash, how much cash do I have now? So the answer is zero, because out of this $10 I got $5 cash. $5 cash is a cash inflow. I spent 5 for payment of cost of goods sold, and I'm left with zero cash flow. So profits and cash is two different things. Cash is king, because you cannot manipulate cash. If you have it, it will appear somewhere in your bank or in your cash. But profit has a lot of adjustments that are done before reaching to net profit. So investors are more interested in cash flow statements, hence one of the portions of the cash flow is related to cash flow from operations. So let's extend this example a bit more. So let's do formalize. So we have sales, we have cost of goods sold, we have gross profit, we have operating expenses, we have operating profit, we have interest, we have tax, and we have net profit. I'm going to do hypothetical numbers here. So I have 100, let's do 50 here, so we have a profit of 50. Let's do 20 more in expensive, we have operating profit of 30, 10 interest, 10 in tax, and we are left with 10 as a net profit. So if I tell you that out of this $100 of sale, 50% was cash, 50% was on credit. Okay, out of this cost of goods sold, 20% was cash, 80% was on credit. All the expenses were paid for in cash. Interest is still to be paid, so it's a liability at the moment. So it adds the layer of complexity to this whole cash flow from operation, but we can make it very simple. So what I tell my students is that there are two ways to prepare cash flows. There is a direct way and there is an indirect way, and most of the time you see a cash flow statement, it is being prepared using indirect method. Okay, so I tell them all the expenses that are appearing in your financial statement, that is statement of financial performance, and previously it was known as profit and loss account, all those expenses which we haven't paid, add them back to the net profit. Since that is the cash that didn't leave the company, so it is still there, so I'm adding it back. And all of the income that we didn't receive, subtracted, since it is the cash that is still to be received. So subtract that and you will have a cash flow from operations. Second is, how would anyone know that which expenses have been paid for, which income is yet to receive? So for expenses, we look for current assets and current liabilities. If expense has been paid in advance, it's a prepaid, it will appear in current asset. If expense is still outstanding, it will appear in current liability. Same goes for income. If your income is yet to be received, so it will appear as a receivable. So we make all these adjustments based on these two criterias, and we have a cash flow from operations. So let's do it again. So let's if I'm going to work my way upwards, and I am going to start adding all those expenses which I haven't paid because the cash didn't leave the company, so I'm adding them back. Expenses like depreciation or accrued wages or tax liability. Okay. And whereas all the income that we have yet to receive is a receivable, and I'll subtract that, and I'll reach up with a number that is known as cash flow from operations. We'll do a question at the end of financing activity. You can stick to this series, and hopefully it will help you have a better understanding of a cash flow statement. Thank you. See you next video.